Homeowners and renters struggling to find or afford insurance.
Action has to be taken, and it has to be taken soon.
Major insurers withdrawing or restricting coverage.
And they saw all the patches that I had in there, so they canceled me out.
Others simply pulling coverage altogether.
We were in an area that they couldn't provide insurance to any longer.
What's available is expensive or not enough.
You're underinsured when it comes to the policy, and there's clearly not going to be enough to make you whole again.
What options are there? What can we expect to see in the future? And how do we protect ourselves? We'll be answering these and more questions in the next hour.
Times have really changed. The market that we have today does not look like anything that we had ever seen.
We can't solve the affordability problem until we solve the availability problem.
Thousands of families are sinking every day into ever greater financial ruin, not because of the fire, but because of the failures of their insurance companies.
Hello, and welcome to a KCAL News special, Home Insurance Crisis. I'm Pat Harvey. This town hall is not a debate, but rather an informative session to help guide you, whether you're an owner or a renter, and hopefully lead to solutions and understanding. And to help our discussion, we are joined by an extensive panel with some of the state's leading industry experts, insurance experts, consumer advocates, and community voices. We are also joined by our consumer and investigative reporters, Christine Lazar and Julie Watts. They'll offer insight on what they've learned firsthand from reporting across the state. And before the Palisades and Eaton fires, the California insurance landscape had already begun to undergo a seismic shift. Many customers found out they wouldn't be renewed last year. And since the fires, the crisis was exacerbated. And now even those who are still insured are fearful of what the future may bring. Will they still have policies when it comes time for renewal? Will their premiums skyrocket? And do they even have enough insurance if a disaster strikes? These are just some of the many questions we'll dive into. Before we begin, though, I want to point out that we did invite all of the top insurers in the state, including the Fair Plan, State Farm, and Mercury, but they declined to participate. So with that, we will begin. And Joy Chen, I want to start with you. You are the Eaton Fire Survivors Network spokesperson. So I want to ask you, what is the biggest concern that you're hearing from people regarding the insurance issues?
So the Eaton Fire Survivors Network is a community of 2,500 displaced families. We've now reached out to the Palisades, and now I'm representing families from both Eaton and the Palisades fires. And what we are seeing now, 5 months after the fire, is that whether any individual family is recovering or not depends largely on which insurance carrier they have. So, for example, my family is with USAA, and we suffered smoke damage. And after 4 months, USAA sent in remediation company, sent in individual independent hygienist, which found more problems. The remediation came in again, hygienist again, and we're back. But thousands of families are sinking every day into ever greater financial ruin, not because of the fire, but because of the failures of their insurance companies to fulfill their contracts. Okay, that's not all companies, just some.
Well, for you and your family, you obviously have the right company.
We are so lucky.
And you know the right questions to ask of these people.
Yes.
So, Tony Signorelli, you're with the Department of Insurance, and you're the Deputy Commissioner for Consumer Services and Market Conduct. Where were we before the fires, and where are we now for insurance availability and renewals?
Well, certainly as a result of the fire, there's definitely increased concern by the insurance industry as to the risk that's out there. And so with regard to the people that live in LA County, though, there are moratoriums in place for the next year for those that are within those fire perimeters and adjacent zip codes. There's also, if you had a total loss, you have a 2-year right to renew your policy, so they're protected in that sense. And then hopefully the goal is for people to rebuild with home hardening techniques and hardening contracting techniques to be able to meet the insurance company's requirements for having more options with different companies, better discounts, that sort of thing.
Okay, and home hardening, obviously, to make your home, the surrounding area, more fireproof. We're going to talk about those kinds of things later in this broadcast, but that's very important to know because I know a community up in Northern California has done just that, and they're doing much better. Rex Frazier, I want to ask you a question. You're president of the Personal Insurance Federation of California. So what are some of the reasons insurance companies are not renewing people, and is this trend expected to continue?
Well, certainly we don't hope it continues. We're eagerly awaiting the state to finalize a set of regulations that would allow companies to factor in the appropriate factors when it comes to pricing and ultimately going back into high-risk communities. We anticipate by the end of July at the latest that those regulations should be done and give companies a chance to make filings that allow them to start writing in high-risk communities again. I would say the real change in the market I saw started in about mid-2019. After
Woolsey.
Well, yeah, after the 2017 Northern and Southern California fires, there wasn't really a perceptible change in the marketplace. It was really after 2018, and I think the insurers started wondering, will events they thought might happen every 100 years start happening every 5 or 10 years? And that definitely led to a big change in the market, that uncertainty.
Yeah, and certainly we've seen fires. We now say that it's all season long or all year long as opposed to from October to December,
exactly,
which had been the case for many, many years. So Harvey Rosenfield, you're a founder of Consumer Watchdog, and you were instrumental in writing legislation that shapes how the insurance industry runs in California, as well as its consumer protections. What do you think the state is doing wrong, and how do you propose to fix it?
There are two things your viewers need to know about insurance. The first is that insurance companies make most of their profits from investing our premiums. So they have an incentive not to pay claims promptly because they get to hold on to that money, sits in the bank, when it really should be paid out immediately to people who need it. The second problem we face, frankly, in California now is that reforms that the voters passed decades ago that have worked to protect consumers have now been abrogated at the behest of the insurance industry. The commissioner, as Mr. Frazier just said, has blessed and created a change in the law so that insurance companies can charge even more money and do so in ways that are antithetical to what's in the best interest of consumers. And that's a separate problem because the commissioner's program really is the insurance industry's program. It's deregulation. And the result is going to be much higher premiums in the short term as those regulations that Mr. Frazier referred to kick in this year. It's not going to solve the problem. It's just common sense. If rates go up, less people will be able to afford coverage. And that's the opposite of what we really need to do here in California.
Okay, listening to that, it's what can we do about it, though? You know, you talk about what they were regulated to do. They take our premiums. That's supposed to go into a reserve.
Right.
So when you have an issue, like a catastrophe, they're able to dip into those reserves and find money. Mm-hmm. But it seems like we've had so many lately that meet that level of catastrophic action. The coffers are what, replenished? I mean, how do you, go ahead.
Well, I mean, to take both problems, and Joy's kind of an expert as a survivor of these fires, as a consumer in this environment, you have to be very vigilant that your insurance company complies with the law. You can't take no for an answer. You have to insist and assert your rights. The insurance companies count on you not doing that. Yes. They want you to just walk away, to get frustrated or exhausted. At the more important, not the more important, but at the broader level, what can we do about higher rates? I mean, that's just Consumer Watchdog, where I work, spends every day challenging insurance companies that are trying to overcharge people. Mm-hmm. And we're asking people to send us their complaints. The Department of Insurance is getting complaints, we know this. We're trying to monitor this process and, as much as we can, protect the public against misbehavior by the insurance companies. But it's a long process, and the danger is here that by the time all these new regulations take effect and rates go through the roof, people aren't going to be able to afford it.
Go ahead, Joy.
Yeah, I mean, I think what Harvey is saying here is what we're seeing happen with Eaton and Palisades Fire families, which is that we've paid our premiums for 20 years, 30 years, expecting that if disaster struck, our insurers would be there. But in the case of so many thousands of families, their insurers are not there. And unfortunately, Commissioner Lara, who we elected to protect California families, has been giving rate hikes, continuing to give these rate hikes without investigating and making sure that companies are actually delivering the service that we paid for. There was just an emergency rate hike for the largest insurer in the state, State Farm, which Commissioner Lara acknowledges is the worst actor, that he's gotten the most number of complaints of any private insurer. We submitted to Commissioner Lara 400 firsthand accounts of State Farm's delays, denials, many of them apparently illegal. And we simply asked that the regulator that we elected to oversee this company conduct an emergency investigation of all of these practices before any further rate hikes.
All right, well, obviously the commissioner is not here. He was invited, but Tony, can you answer that question?
Well, yeah, it's somewhat disappointing that there's a lot of misinformation and misunderstanding as to what the rules are and what the laws are. For example, Consumer Watchdog wrote some of those laws. We're following the laws that he wrote. So he may have an issue with that, but we're really following the formulas and the laws. It's very complex with regard to rates and premiums. Premiums are already increasing before any of these other new things come into play with regard to catastrophe models, reinsurance, and those sorts of things. And people were already having availability problems. We can't solve the affordability problem until we solve the availability problem. Once we solve the availability problem, you'll have more companies competing, because in order for insurance companies to use these new tools that the new regulations will allow, they have to commit to writing more policies in these distressed areas. So that's really the goal.
Okay, Harvey is shaking his head. You don't see that happening?
We looked very closely at those regulations that Mr. Signorelli is talking about, and the commissioner has gone around the state promising, if I'm going to deregulate the insurance companies, and in exchange I'm going to sell more policies. But there's loopholes in those regulations that would allow an insurance company to sell no more policies.
Rex,
Yeah.
I want you to answer a question, because you said something earlier about having 2 years to file or 2 years on your claim. You made a mention of 2 years. Can you explain?
Maybe Tony did.
Okay.
Yeah, the 2 years it applies to people that had a total loss of their home. They're allowed to get the next 2 renewals.
Okay.
So that just protects them from losing their policy.
All right.
I mean, I think the important thing to remember, well, first of all, to the previous comments, the new regulations that are coming online, they have nothing to do with the price increases that we've seen over the last several years. Those have been under the rules that Consumer Watchdog wrote. So I don't understand the point he's trying to make. But moving forward, it's important to remember the Department of Insurance, under the Consumer Watchdog bill that sets the law of today, it requires the state to play 2 roles. One is to make sure the state protects against excessive rates, and the other is to make sure that insurance companies have enough money to pay their claims and that their solvency is not jeopardized. So in the State Farm example that they were talking about, just look at what the judge said in recommending approval of the rate increase. It said their solvency was incredibly jeopardized, and that in the absence of a rate increase, are they going to be there? So we have 2 things to consider here, and if the answer is always going to be in a hotter, drier future, we're going to have, fewer claims? When you have homes built near burnable things, we're going to have fewer claims? No, we're going to have more claims in a hotter, drier future. That's going to mean more insurance losses, and that's going to mean you have to find a way to fund those.
Okay. Joy, before I let you speak, I do want to get in some phone calls. We did have a phone bank yesterday, and a number of viewers called in. And when I say a number, I want to say about 500, I believe, in just the first 3 hours. So I'm going to go with one of their questions, because we think it's important to get to that. And it's about the viewers and how we can help them. This was from Cynthia. She asked, can an insurance company drop you because you filed a claim? Who wants to go?
I can
Okay,
start.
Tony.
Well, first it's going to depend on your insurance company. For the most part, the fact that you filed a claim isn't enough reason to non-renew you, let's say, or cancel your policy. However, if you have more than one claim over a period of time, there are some companies that will non-renew you in those certain situations, depending on what kind of claim it is. If it's
And
like,
that's in the small print. That's for you to read when you file, when you get your insurance.
Yeah, it's when you get your insurance. Also, you may get a notice after you've had a claim as to how it may work if you have another claim and that sort of thing. But it is confusing to people. We admit that, and that's why if people feel that they're in a situation like that, they certainly should give us a call and let us walk them through it.
So, but does that happen? I mean, are people getting canceled?
Well,
just for one claim?
It depends on the size of the claim and the type of claim. You know, for example, if it's a huge water claim where there's low maintenance on the water system and the pipes, then it may result in the insurance company saying that's not the kind of home we want to insure. But it's more the exception than the rule, a single claim.
And well, I was going to say, would they talk about that when you go to get that insurance? Would they tell you that we're not, okay, Harvey's shaking his head, like we're not going to pay for certain types of incidents, like a water claim?
Yeah.
No, I mean,
should the consumer know that though?
I mean, if you're a lawyer and you have a few dozen hours to read the policy, they can figure it out. But when you go in there, it's all about buy the policy. Some companies are reputable. A few companies will stand by the policy. But when it comes to, for example, what everybody's dealing with right now, which is smoke damage, which is required by law to be covered, many companies, including State Farm, are refusing or denying or delaying. And go ahead.
No, I don't want to cut you off, Harvey.
No, please.
I mean, I think what this is getting at is the basic problem that many companies are simply not fulfilling their contracts to their policyholders. And that's where we really need our regulators to step in. I mean, so imagine if this was like cars, if you were just selling cars and you had a regulator that says, sure, I'm here to protect the profits of this company. And I'm not even going to look at whether they're delivering cars. That's not my concern here. What happens then, and even if I have hundreds of complaints that I understand this is the worst player in the industry, they're the worst at delivering cars, but I'm not going to concern about that. That green lights systemic abuse, and it sends a message to every policyholder.
We're going to talk more about that, but how do we answer Cynthia's question? They shouldn't be able to drop the claim.
Yeah, no, well, let me just clarify, Pat. They'll pay the claim. They're not going to deny the claim. It's just that if it results in an increased risk for the company, and they have that in their underwriting guidelines filed with the Department of Insurance, then they would be permitted to non-renew that policyholder down the road.
Okay, but not denial.
There's a term for it. It's called use it and lose it.
Okay.
You pay for the premium all those years. The minute you file a claim, thanks for coming.
All right, we'll be right back. As you could tell, we have so much more to talk about, so much more to cover here on our town hall. We'll be back after a few words from our sponsors.
The FAIR Plan cannot run out of money.
To be clear, it did run out of money.
And we intend to make sure that FAIR Plan or any other company pays fire claims as well as all smoke claims.
The reason all of us should care is that we're now on the hook, all of us, in case the FAIR Plan runs out of money.
Which it did, which it has.
That's right.
That was former California Insurance Commissioner Dave Jones discussing the FAIR Plan. State lawmakers created this as the insurance of last resort in the 1960s, but now it is one of the largest insurers in the state. Many people have been forced into the plan as more people in low-risk areas lose their insurance. So Julie Watts joins us now here at the discussion. And Julie, you've reported on the FAIR Plan in extensive form over several months now. We thank you for that. I'm going to get to you in a moment, but we want Tony to talk about what the former commissioner just said there, that the FAIR Plan has run out of money. So how did we get there?
Well, we got there for a couple of different reasons. Obviously, the risk is there, more policies in distressed areas, causing greater exposure, greater claims, higher costs, and that resulted in the FAIR Plan needing an infusion of money to be able to pay their claims.
Are they going to get that infusion of money, or is it just dry?
Yeah, they did. They did receive their money from all the insurance companies that are members of the FAIR Plan. were required to pay their pro rata share of money that Fair Plan needed to pay these claims. So they made those payments.
Okay, so but anytime you hear that we've run out of money, then that scares people.
Pat, if I may, the Fair Plan cannot run out of money. The way it's set up is every insurance company doing business in California must be a member of the Fair Plan and submit to its rules. So when the Fair Plan runs out of money, after the LA fires, they were $1 billion short. And so they said to the insurance industry, give us $1 billion, and the insurance industry must. So that means the state's leader at 21% of the market, State Farm, gets a request for $210 million. When they're already trying to pay their own claims from the fire, they have to pay the Fair Plan $210 million, and that assessment has already happened.
But to be clear, it did run out of money. In other words, the Fair Plan didn't have enough in its reserves to pay these claims. So then what it did, and the way it was set up, is to say, okay, now we need an assessment. All the insurance companies, you pay us. But what happened just before the fires, days before the fires, a new regulation went into effect. And that regulation says now the insurers can go to the Department of Insurance and say, hey, we need to be reimbursed by our ratepayers. So for instance, I have State Farm. If State Farm now has to pay all this money to reimburse the Fair Plan, State Farm can then request from the Department of Insurance to charge me, one of their customers, even though I don't have the Fair Plan.
But there's an important thing. Prior to this change in regulation, the way it used to be is that insurance companies would just go to the Department of Insurance and ask for a rate increase.
Okay, but that's not happening.
Well, that's what would happen in the absence of this change, where the commissioner said he didn't want a Fair Plan assessment to result in a permanent increase in rates. He wanted to do it on a one-time basis. And even then, the insurance company had to eat half of that amount. So it's a very big change from the way it was, let's say, after Northridge earthquake. There were fires following the earthquake, and companies had big fire losses after Northridge. And you had companies that were increasing their homeowners insurance rates to pay for those Fair Plan assessments they had to pay. So this commissioner said he didn't want that, and he didn't want permanent rate increases. And he figured out a way to do it on a one-time basis to get some money, but also make the insurance companies eat part of that on their own.
So in other words, they're going to get their money one way or another. At least this time they only get one payment instead of raising our rates forever.
And half. They only get half, as opposed to in the past they got fully reimbursed.
Okay. Smoke damage, Tony. We talked about this briefly, but this specifically has to do with the Fair Plan. All insurers have to cover smoke damage under the Fair Plan. Can you confirm that?
The Fair Plan, just like any other insurance company, covers the peril of fire. They're required to cover smoke damage. Unfortunately, there were recent court cases earlier this year where some companies, including the Fair Plan, decided we don't have to pay smoke claims the way we used to. We're going to change the way we pay them. And that's causing an issue. And we recognize that. We recognize the complaints that were mentioned earlier. And we're dealing with those issues and dealing with those complaints. And we intend to make sure that Fair Plan or any other company pays fire claims as well as all smoke claims.
Well, Julie, you have been doing a lot of investigating, and you found some very secretive, is that right, saying that? A secretive nature about the Fair Plan?
Yeah, well, so the Fair Plan, the way it's set up, is not a state agency, right? So we don't have a right to request records. And so, yeah, we found a lot of secrets. For instance, they are not required to disclose who is on their board. They are not required to disclose their financial statements like basically every other insurer in the state. And so we looked at this. We also found that they are not required, but we asked who was on the board several times. They wouldn't tell us. And so we brought this to the insurance commissioner, and the insurance commissioner told us that he was going to look into it. He was going to basically force the Fair Plan to become more transparent, and he would have to do that through legislation, right? What I think is really interesting, though, and the reason this matters to us now, right, is that traditionally, as we talked about, if the Fair Plan ran out of money, the insurers covered it. Well, now with this new regulation, we're on the hook when the Fair Plan runs out of money. And so suddenly the Fair Plan's finances impact us all. And their board meetings are private, their minutes are private. We really don't have any information about when we might be on the hook for this money. So actually, as a result of our investigation and the insurance commissioner stepping up and saying he was going to take action, they have now voluntarily increased transparency. They have published some audited financial reports. We do now have a list of all the insurers who are on the Fair Plan's executive board. We don't know the people, but we do have a list. So baby steps in the right direction. But yeah, there were some real concerns about how secretive the Fair Plan was, especially when it came to finances, especially now that we're all on the hook.
Okay, so now people can get more information by going to their website?
Yes, the Fair Plan has it posted on their website, and you can also go to the Department of Insurance website to get this information as well.
Okay. But we are not done talking about the Fair Plan, folks. In fact, as well as some viewer questions that we're going to get to next.
When you hear rates go up, you think, oh, it's the Department of Insurance. But there are so many nuances here.
They can't allow rates to be so low that a company's solvency is jeopardized. They can't allow them to be so high that they're excessive rates.
Once there's more competition, our hope is that the rates will go down at that point.
Welcome back, everyone. Now, we're still discussing the California Fair Plan and the growing questions and issues surrounding it. So, Julie, you and Rex have spoken about this issue, especially the rising costs and the loss of coverage. So tell us about your conversation.
You know, it might surprise a lot of people, and we've talked about this in depth, but Californians actually spend, on average, less for homeowners insurance than people in 19 other states, even though it costs so much more to rebuild here. Now, that said, it's important to note insurers are still profitable here in California, but our CBS News California data analysis found profitability has declined, and companies rely on those profits to replenish reserves, which they need to cover big events like the LA fire.
If we were paying more right now for insurance, we wouldn't be in this situation.
That's 100% what I'm saying. And I've been saying that for years. How can we simultaneously say we're in a changing climate, we have really expensive homes that are built next to a lot of burnable things, and then act like, oh, there's going to be no impact on rates? That's ridiculous.
Now, Rex, we've chatted quite a bit about this. Based on your argument, listen, there are viewers out there who are struggling to deal with higher costs across the board, from gas to groceries, inflation. We can't just afford to keep paying more. But what I hear you saying is, well, we have to pay more. But are we going to have to pay more indefinitely? Like, what's the fix?
Well, that's certainly not viable to think that we can just indefinitely pay more. I think we'll see one more round of rate increases once new rules allow companies to look at, for instance, projecting their future losses based on what a climate looks like in the future. But after that, simultaneously with that, companies are going to be filing for how are they going to start writing in high-risk areas again. But if we don't get our arms around resiliency and mitigation and vegetation management, which can be a very touchy subject in communities, particularly people who live in beautiful areas, they don't exactly want that beauty to be diminished unless we start getting our arms around how to rebuild in resilient ways and make sure that we protect against what's called urban conflagration, which is once that ember gets into a subdivision and then that fire starts moving from home to home, how do we stop that? Because I think the thing that's causing so much market disruption right now is that we're having fires that companies expected would happen a lot less frequently. But yet if they happen each year, year after year, there's not enough money in the system to stay solvent.
Do we have enough money to really deal with the vegetation, to deal with that management? In other words, we know global warming is real. So is it just a losing battle? Are we ever going to get to a point where we're not dealing with this issue and insurers won't keep raising rates?
Our members don't believe that we have an uninsurable future. We just have to have normal rules that every other state in the country has, right? We're anomalous. We have unique rules that don't allow companies to plan for that future.
We also have lower rates and better policies because of those rules.
Well, we have lower rates and there's a consequence to that. Remember, the state's role is to make sure that rates are neither inadequate nor excessive. And to the extent they become inadequate and we have rebuilding costs that outstrip the ability of companies to pay, we're going to have less companies doing business here. And so that's a self-inflicted wound if we don't address that.
I wanted to mention that as well. You throw in inflation, you throw in the cost of rebuilding structures. We could have supply chain issues, which we're having a lot of issues that have happened just over the last year or so, and we're still seeing the ramifications of some of that.
What makes me most nervous is when we look at people rebuilding in Los Angeles. We're hearing quotes from contractors that could be $800–900 a square foot, and who realistically buys that amount of insurance?
And we've heard so much that $350 per square foot. If you have that, then you're good.
Well,
that's not
in California,
the case, especially not anymore.
No.
Right? Because it's like at least $800 from what I've heard in the Palisades, and at least maybe $500 per square foot in the Eden fires.
Yeah, and
so that well exceeds that $300.
Yeah, and this is a common worry. Certainly, if you think about the San Diego fire in 2003 when Scripps Ranch burned.
Yeah.
We were having this exact same discussion. Do we have enough money in people's policies to repay? And what that community did, it was a cohesive community that went out and worked with builders to get a basic number of floor plans with some minimum amount of customizations, and they were able to bring the construction costs down to where the homes built in Scripps Ranch following the fire were actually larger than they were pre-loss.
Wow.
So it takes a lot of cooperation, and we're going to need that cooperation to rebuild in these communities in Los Angeles.
Okay, we're going to get to some viewer questions. Viewer Robert sent us a question. He wrote that he is a State Farm client, outraged that insurance costs are going up every year, and he asked this: when is it going to stop, and what can a consumer do right now?
I'd like to know that too, Tony.
Well, I mean, as we've been talking about, I mean, the rates and the premiums are going to be based on the risk that the particular insurance company has and their history of their claims. And so it's going to stop and it's going to level off once the risk goes down and it levels off, as well as competition increases. And that's one of the goals of the Commissioner's Sustainable Insurance Strategy, which is to require insurance companies to write in these distressed areas. And we believe the insurance companies will then have to compete for some of that business to be able to meet those commitments. And in turn, once there's more competition, our hope is that the rates will go down at that point.
Do you see more competition right now? Can you answer?
Not right now.
Right now, there's no competition.
No, I think companies are waiting for the state's regulations, which we understand will be finalized maybe June or July. I think the struggle for insurers is on the front end. People want things to be very cheap when it comes to how much they pay.
Well, yeah, they do.
And then on the back end, they want every claim to be paid. That presents a tension. And so I've seen so many disasters by now. What I can tell you is that two things are for certain. There's going to be some policyholders that have bad claims experience, and there's going to be some policyholders who want to take advantage of a situation.
So would you say to this gentleman that called in to shop? And he says,
well, absolutely shop, but I think right now the market is so constricted that these regulatory changes are what we need to at least give insurers an opportunity to start competing again, which right now it's difficult to do.
All right, this is for you, Tony, because this has to do with what we're talking about. The Department of Insurance recently approved an emergency rate hike for State Farm. In fact, up to 17% for homeowners, 15% for renters, 38% for rental dwellings. So what led to the approval, Tony, and what's your response to viewers like Robert?
Well, the rate approval process is a very complex, it's formulaic. And so it goes in front of this went to a hearing because it's an emergency request. The Commissioner sent it to hearing. It goes through an administrative law judge who follows the law and the rules that we previously mentioned that are in place. And then based on the math of it, based on the numbers and the solvency situation of a particular company, the judge comes down with a decision as to whether to approve it, disapprove it, or approve it a certain amount. I think they approved a little bit less than what was requested. And now it's going to a permanent hearing where it's going to get a deeper dive into the solvency of that, the financial stability of that company to determine the accuracy of the emergency declaration that was made.
You know what I found interesting in my reporting is everybody says, when you hear rates go up, you think, oh, it's the Department of Insurance. But there are so many nuances here. And there are many cases where they don't have an option to say no, or they don't have an option to act in a way that we, of course, as consumer advocates, wish they could and they would. And that would require lawmakers and changes to legislation.
Well, I mean, there's a limit to what the legislature can do under Proposition 103. Which is the ballot measure that controls this. And so it's really the Department of Insurance's regulations. And under the regulations, they're very clear the Department of Insurance has a dual role. They can't allow rates to be so low that a company's solvency is jeopardized. They can't allow them to be so high that they're excessive rates. So they have a responsibility to implement the regulations that are in place today. And those are controlled not just by their own decision, but they're controlled by the Constitution.
So, okay, I'm going to take another quick break. We have a question for everyone here. If you can get a policy, what do you actually need to make sure you're covered, and what can you get rid of? How you can save money and make sure you don't end up underinsured.
Actually, average 2/3 across the country have been estimated to be underinsured. So the insurers know this is a problem.
No matter where you are in California, and we'll talk to people that say, I'm not in the hills, there's no fire. The house can burn.
Don't go into it as a fight. Go into it more as I need to find out all the information I can get.
We just don't know at this stage in life if we can take on a rebuild and if we want that debt hanging over us.
Whether you're a renter or an owner, it can be difficult navigating insurance policies and figuring out what's right for you. It's important to pay attention to the details of your coverage and the true costs of rebuilding. I'm now joined by our consumer reporter, Christine Lazar, exceptional, insurance broker Carl Sussman, and United Policyholders Executive Director Amy Bach, and Janet Ruiz with the Insurance Information Institute. Amy, we're going to start with you. Your nonprofit works to educate insurance consumers. So what concerns are you hearing about after the recent fires and even before they broke out?
Well, before they broke out, there's been a lot of fear, frustration, and anger of people who never had to think about insurance before, and suddenly they had lost their insurance and were scrambling and thought, well, why is this so hard? After the fire, you have a lot of people who are saying, well, I thought I had full coverage, turns out I don't, or I thought I could rely on my insurer to put my house back the way it was, but I'm hitting all these walls and friction, a lot of frustration, on a topic that, frankly, consumers are not used to thinking about. So we've been spending a lot of time at United Policyholders problem solving for consumers, informing consumers, and then working with the partners in this space that are also looking for solutions.
Are you finding answers?
Yes, to some degree we are.
Okay.
I think, yeah, to some degree we are. I think from my perspective, I've been an insurance consumer advocate now for many, many years, so probably almost 40 years. And times have really changed. The market that we have today does not look like anything that we had ever seen. So we are in a time of great change. But I think that we're rising to the occasion. I think the people who have the good intentions to bring solutions, things like hybrid government-private, right? You know, the property insurance system is provided by for-profit companies. There are going to be limitations to what they're willing to do, who they're willing to insure, and government has to be part of the solution, which isn't always popular, you know, everywhere.
With private companies,
right?
That's for sure.
Right.
Okay, this is a really important question for Carl. You're very well versed with everything insurance. Costs are rising, as Amy mentioned. Getting insurance is getting harder. What do people actually need in their policies, and are there things that they can do without? For example, we know a lot of people in California don't have earthquake insurance. But right now, what are the things that you can tell people, you need this for sure, Others, maybe not so much.
Well, it's important to be sure that they have coverage for what's going to be a loss. That's it, simple, just like that. As long as you know what the loss is going to be, buy coverage for that. But with all seriousness, there are some basic things that I think everybody wants to be sure they have. Fire insurance is definitely one of them. No matter where you are in California, and we'll talk to people that say, I'm not in the hills, there's no fire, the house can burn. Believe me, fire insurance is the primary peril. It's the #1 peril that's been around the longest. Properties burn. So fire insurance is one you definitely want to be sure that you have. On top of that, depending on where you are, you might also want to be looking for a flood insurance policy. That could be either purchased through FEMA, which you can get through an independent broker, or you can purchase it through an independent company that offers flood insurance. Again, homeowners policies can cover water damage. However, they will not cover flood damage.
Okay, there's a difference there.
Yes.
Is there anything else in that homeowners insurance policy, though, that you would look at and say, we don't necessarily need that in particular?
Well, I think if you're looking to pare down a homeowner's policy, a standard policy to try and save some money, one of the things you can do is look at things like the other structure. Most policies will come with a percentage that is included for things that are not attached to your house. And if you don't have anything that's detached, like a garage or a swimming pool, things like that, you can look to lower that coverage. Or if you have personal property coverage, again, it's usually a percentage of that dwelling amount. If you look and you say, I don't have $500,000 in personal property, then see about lowering that coverage down as well, because there's no reason to pay for it if you don't have it.
That's really important. I'm so glad that we talked about that. Now, Janet, your members are the insurance companies, and the public perception of insurers right now, it's not so good. So how can the two groups successfully work together to help the consumer?
It's really important to pick an insurance company, look through their websites, find out what they're all about. Most of the perceptions are usually because maybe somebody had a bad experience or didn't get what they thought they deserved. But really, you usually work with an insurance agent, like say Carl, or some companies have dedicated insurance agents. And really developing a relationship with that agent, call them, ask them questions. I think it came up earlier that, people don't always like to think about insurance. So they kind of ignore it. It's like you buy it and stash it away. But now I think we're all seeing that we need to be more involved in our insurance. So really take the time to get to know your company, your agent. Now, if you're in a claim situation, really talk to those insurance adjusters, have lists of questions, really maximize your time with them. So don't go into it as a fight, go into it more as I need to find out all the information I can get.
I hope people are listening to this when you said talk about, find out about the adjusters. For example, are you going to send one adjuster or many? People are experiencing things that are happening right now that they hadn't experienced before. So that's something.
And that's an important part of when you have a catastrophe. So, if it was a single house fire, like Carl said, any house can burn. That's different. But when you're in a situation after a catastrophe, you probably will have more than one adjuster. But make sure you're taking notes when you're talking to them so that you can read them back to the next adjuster. And then ask them, are you putting this in your system? It's really a back and forth conversation. And since it's new to people and they're in a very difficult situation, they've lost everything or a lot of things, they don't think to do that. And so that's what I always recommend is really have good conversations, keep really good notes. And if you have trouble with one adjuster, you can actually ask for a supervisor. So people need to really manage that situation and advocate for themselves. It's better if you don't get angry, but just really talk through it. And I know that can be challenging.
This is a question that I have personally. It's not on, I don't know if anybody called in about this, Christine. This is something that I experienced decades ago. I heard from someone, well, you should just get a broker who represents different insurance companies and they can find the right one for you. Okay, that's you, Carl, right?
That's me.
So I'm going to ask, an honest question, is that the best way to go?
It really is the best way to go, because at the end of the day, and I used to be a little more wishy-washy, that it depends and maybe you can get, at the end of the day, you want to have choices. My job is to find the best product for consumers, for my client. That's what I do. We don't have to take a circle and try and force it into a square peg because all we have to sell is the square peg. So the idea is to try and find the company that will match the consumer's needs. Right now, the big challenge, of course, is we don't have markets that are available to be able to go to the consumers and say, here are all of the choices, let's find the one that fits best for you. Instead of shopping around, we're hunting. If we can grab something, we grab it. We say, okay, this is what we can find right now. Is this something that will work for you or not?
And Christine, I know you found this as well. Now you really have to take a lot of time to find out, like, who's filing claims anymore. There are many companies, many insurance companies that are no longer taking claims. Is that right? In the state
Not
of
necessarily
California.
writing new policies.
Writing new
So our
policies.
competition has gone down. So now you are often in the position where you call a broker and say, hey, I got a letter that I'm going to be dropped. I need new insurance. And sometimes the brokers like Carl will call around and say, no one else wants to insure you. And then, of course, you end up on the insurance of last resort, which is the FAIR plan, which is a very limited policy and only covers your fire risk. So then you have to get different wraparound policies to cover, say, flooding or a pipe bursting, and that can be really complicated. Also, the FAIR plan has a limit, $3 million, right? I mean, it sounds like a lot of money, but when we're talking about $1,000 a square foot to rebuild, and we're talking about Southern California real estate where everything is very expensive here, it's really not a lot of money, and you're running into situations where people are woefully underinsured because their whole home cannot be covered by the FAIR plan's coverage.
That leads us into this next topic, Christine. A lot of people are underinsured. We're seeing so many people, especially since the Eaton and Palisades fires broke out. According to United Policyholders, more than half of California wildfire victims are underinsured. More than half. The California State Board calls it a crisis of uninsurance. They're looking at claims. The algorithms the state's insurance companies rely on could be faulty. That's another discussion. We received a question, in fact, from a viewer about this very topic, and they wrote, I have home insurance with the VA, but I think I'm underinsured. I need to find out if I am underinsured or not. So the question to all of you is, how can someone know if they're underinsured if they think they are? And which they probably, in this case, most of us should try to find out. And that sounds like that's a Carl.
Oh.
Go ahead.
Yeah, well, this is the thing, and not to put this back on consumers, but every day the discussion goes like this. Here's the product, here's the amount of coverage and the price. And it's, oh, well, I can get it somewhere else. They're insuring me for less and it costs less. And you have this conversation and you try and educate people that, well, that's not the same as what you're being offered. That's not as much coverage. Unfortunately, over time, that's a bit of a race to the bottom. And that's why we've really gotten to a position right now where so many people are underinsured, not the uninsured people altogether, but people that don't have sufficient insurance. It was a cost savings measure. Every day, that's a conversation that people will say is, how much can I lower my premium if I remove this coverage? I can get a quote somewhere else, it used to be, with another company, and they would be insuring them for significantly less. So now when all of a sudden we're having disasters like this and people are, like Janet said, they're actually looking at their policies that they kind of socked away and figured that that's as good as it needs to be, they're realizing that, oh, you know what, maybe I shouldn't have lowered all of those limits to save a few dollars now when I really need it.
So Janet, you're about to, I'm going to get to you, Amy.
Okay.
But Janet,
I just had one simple way to find out if you're underinsured is to look at your square footage and check in with local builders. Most people have a friend or there's a local builder association, and just find out what is the average going rate per square foot. And then you look at your house and go, okay, is my house average or is it, fancier or under average? And at least do that basic math. That gives you some sense of if you have enough
coverage. Amy?
Well, we feel that consumers should be able to rely on their insurance companies and their sales representatives
to do that.
To do that, since insurers are paying claims, all the time, all around the country, and the average consumer has no idea what it would cost to put their home back, and they assume that, well, I'm paying a commission to a guy like Carl. He knows, right? And if anything, he wants to overinsure me. That's what a lot of people think, right? And so, Janet's suggestion is a good one for the basics, but, the law has been protecting insurers in this context, and so underinsured people often have a really hard time, getting a remedy. Yeah. And the problem for us is that, we've been trying to tackle this problem for a long time, and, the 360 value, that's the software that most of the insurers have been using. Well, the insurers know it's not working right? They know that actually average 2/3 across the country have been estimated to be underinsured. So the insurers know this is a problem, but they keep using the same software. And because the law protects them, this problem just keeps going on and on. We can do everything we can to educate consumers and help them. But, ultimately, consumers are going to rely on the professionals to tell them.
Of course, because that's what they're used to. Christine, believe it or not, we don't have that much time left. I want to get your final thoughts.
I think that what's really important is that we now move forward and not just look backward. And I've been talking to a lot of people who are rebuilding and renovating differently, which I think is really going to be the secret to our success, doing things to harden their homes. But then we also need to have the assurance that when we spend this money, when we make these changes to our property, that insurers are then going to lower our rates. Otherwise, consumers are not going to do it because there's no payoff.
All right, so now they know what to ask. We think our viewers should know what to ask.
Yeah, knowledge is power.
Absolutely. Thank you so very much for being here. And thank you for watching a KCAL News special, Home Insurance Crisis. I'm Pat Harvey, and for more information and insurance resources, just go to our website, kcalnews.com/insurancehq. We're here for you.